everyone. Today we have Mr. Arihant Jain with us, who is a co-founder at Seekho and have raised millions of dollars for other startups like 1MG, Healthcart, Freshworks in the past. So Arihant, why don't you tell your story? What are the things that have influenced you to become whatever you are today?
Sure, yeah. I think like all startup junkies like myself, the Silicon Valley was by far the largest influencer. I actually reached there in the year 2000 for college at Stanford, and I saw the dot bomb where all the startups had crashed in 2000 to 2002 or 3. So I had a first row view to all the madness of Silicon Valley. Post graduation, I actually worked at Google at their headquarters in Mountain View. And there is no better place than that to truly understand the madness of the internet. I reached there just post IPO, beautiful Google campuses, Larry and Sergey buzzing around, happy hours, Colin Powell coming in as a speaker, just complete insanity. In the lobbies, they used to have these big screens which shows all the searches happening on lifetime. People naming their kids AdWord or AdSense, all kinds of madness is what I saw. And I think I truly fell in love with the power of the internet then. And it took me another 5 years, but then in the past decade, I've been a part of the startup ecosystem, now building out my 5th startup.
Awesome. So Arihant, as you said that, over a decade that you have experience in building startups, so you must be in touch with a lot of VCs, investors. So what have been some of the most interesting conversations that you have with the VCs or investors per se?
So I've met all kinds of investors, Indian ones, Chinese ones, American ones, European ones, angel investors. The whole startup sort of excitement and glamour has almost got everybody coming into being an investor. I've also had landlords from Haryana pretending to be angel investors and, trying to funnel their cash money. I've had all kinds of different flavors out there. Couple of fun, interesting stories. I actually closed my seed round once over a cup of coffee at a coffee shop. Literally, I was sitting there with my laptop, showing my deck, presenting in a very formal manner. And the investor reached out, literally slammed my laptop shut. And he's like, "Yeah, ye sab chodo. Real batao kya scene hai?" And 20 minutes later, we'd agreed on the broad terms. And that was the start of that round. Besides that, I've been 1 a.m. in a San Francisco hotel lobby pitching to an entire IC of Chinese investors with 15 people on one side in a big Zoom meeting. And me alone on the other side in the middle of the night, chugging coffee, trying to stay awake. All kinds of fun stories. I've met very sophisticated investors, very basic ones, very desi ones to very polished ones. There's bad stories too. There's been another time when I was pitching and literally 5 minutes in the pitch, the senior partner is like, "I'm very bored. Can you stop boring me? Where is the excitement in your pitch?" So it really goes in many different flavors. I think it's a good experience for anybody who wants to go through it.
Awesome. Interesting. So I think you have met all kind of investors. You have seen all kind of series as well. You have raised seed fund, Series A, Series B, Series C. What do investors look for at different stages?
That's a great question, and I think I get asked that a lot. You have to understand that different stages, different things within a startup are important. Very basically, at a seed stage, typically people are looking at the team and the general idea or direction, but everybody knows that whatever you're thinking at seed stage isn't really what is going to materialize. The second thing is that at this next stage at Series A, they're looking for product market fit. And that means that you have a product that everybody wants, and that's evident from either the data or the traction that you're getting. And you have enough proof that Series A is for you to grow forward. Post Series A, in a Series B or C, or even further on, then it really comes down to the metrics and the data points. So when you get into a Series B and then later it becomes more and more important, It's all about the data, the unit economics, the cohort analysis, the CAC LTV. If you don't understand these terms, don't worry. But net, it really becomes about all the real business metrics.
All right. Quite interesting one. Arihant, you have raised like for the CK5, you have raised from one of the biggest VC firms, right? Seed Capital. How difficult or easy it was for you to convince the investors?
I fortunately or unfortunately had it very, very easy. They actually found us and had a general informational hi hello call, and then literally it just took us one single pitch meeting where we presented to about half a dozen people, 1 hour, 40-minute pitch, 15-minute questions, and that's all it took. I must say that Sequoia is by far one of the most advanced, sophisticated funds, and also one that moves very, very fast. So you see this varying a lot between different funds, but our seed round was literally two guys in a deck. We didn't even have a company incorporated. We didn't have, even the basics in place. But we had a powerful story and good founder profiles.
Okay, that's quite interesting. I didn't have like a last couple of questions, and one is a very common question that everyone asks for, which is like, what is the best time to raise funds? Is it as early as possible or something else?
So I have a particular view on this, and not necessarily all entrepreneurs should follow it.
Yeah.
I genuinely believe that a VC funded startup, an entrepreneur is always raising money. So no matter if you're at a dinner party, you meet somebody in the elevator, it doesn't matter if you've closed a round, looking for a round, you are always pitching and always raising. Having said that, the real answer is actually that you should raise money when you don't need it. Now, this might sound counterintuitive, but essentially, VCs are so good at what they do is that they can smell fear. And if your runway is running out or if your metrics are not there, they will know it, right? So the best time to raise is when you have a comfortable runway, you've got the right traction or the metrics, and that's when you should raise.
Okay. Quite interesting. So I have like last question, like what is a piece of advice that you have for all the young entrepreneurs who are looking to raise funds, especially who are just graduated or about to graduate?
I have lots of advice, so I'll take my time with this question if we have it. The first is that you need to fundamentally ask yourself, why are you building the startup that you're building? And you need to truly believe in whatever world-changing idea that you're pursuing, or the technology or the solution that you're going after. The VC funding or fundraising is a means to an end. It is not the end itself. And I've met enough founders, enough entrepreneurs who get lost in that distinction and forget that, the real business fundamental or the real technology change that they're bringing is far more important than the fundraise itself. So many of the entrepreneurs enjoy the fundraising activity itself so much that it almost becomes like a sport for them, and the fundraise amount is like a score that's going up. But that's really the wrong perspective to have. So I truly believe that you should focus on what you're building, get it right, and if you get it right, then the money will follow. I'm sorry, most of you viewers was probably expecting a more different answer, but this fundamental truth stands. Second is that, let the business or the traction speak for itself. There is no substitute to that. You might think you have a great product, but until people are using it and until people are loving it, it doesn't work. So again, one of the truisms is that product market fit is super important. And product market fit means that majority of your users' lives would not be the same if your product wasn't there. So the best definition I've heard is that if you poll your existing users, and out of 100, if 60 people say that they will be really, really, really unhappy if your product shuts down, then you have product market fit. The third important thing I think in fundraising is that you have to get your story right. Now, this again is something that probably a lot of you hear, but the same business, the same model, the same technology can be pitched and positioned in many different ways. And at the end of the day, even a VC is a human being, and we humans have a DNA or a biological way of reacting to stories. Everything around us is powerful storytelling. So what is your narrative? How do you build out the actual sequence and the story that you're trying to pitch? How do you paint that vision on how you're going to change the world, how the world is going to look like a different place with your startup or with your technology? What is the story of the founders? Why did they choose to do what they did? What is it in their past, in their education, in their work experience that makes them better? Why are you going to be unique in whatever you're doing and beat out all the hundreds and thousands of competition out there? All of these elements are part of the narrative, are part of the story. And often, believe it or not, story trumps everything. A lot of people will argue about technology or traction. But I truly believe that the narrative and the storytelling is perhaps one of the most important things. I can conclude this answer by saying that you have to put yourself in the VC's shoes when you are pitching or when you're trying to raise funds, and you have to understand the 2-3 things that they're looking for. So as a VC, they're looking for, is this a problem that is important enough or big enough or urgent enough, right? So how big is this problem, right? The way you are solving it, is that really going to be the right solution, right? And third, are you the right team to do it, right? So is it worth solving? How big is it? And are these the guys who are going to succeed? Is essentially how a VC looks at it. And that is, in a nutshell, what you're trying to prove whenever you meet or pitch to VCs.
Yeah, interesting. Like, quite an interesting answer. Thank you so much, Arihant, for the time and for all the knowledge and all things that you have shared with us in this podcast. Thank you so much for that.
Thank you so much. It's such my pleasure. Good luck to all the budding entrepreneurs out there. I hope you raise millions and billions of dollars.
Thank you.
Thank you. Bye. Bye.